Okay, part two of about trading the S&P E-minis. So let's go over some advantages to trading the S&P E-mini futures. A couple of them are going to be leverage. You're able to leverage your money. So you're going to be able to control notional value a lot more with less capital than you would, we'll say, with if you were to go out and buy SPY, the ETF stock. The other thing is it trades 23 hours a day. I'll go over the exact hours, but you could trade them 6 in the morning, 10 at night, pretty much whenever you want. So you're able to control your risk overnight too. The trading symbol for the S&P E-minis on Thinkorswim is /ES. Okay. So all you need to do is type in /ES, and that'll actually bring up the front month future contract. There are four future contracts expire 4 times a year: March, June, September, and December. Okay, they expire the third Friday, okay, of all those months. And when they expire to cash settled. So if you're in a contract and it's about to expire, what you need to do is what's called rolling the position, where all you're really doing is you're selling the front month contract and then you would buy the back month contract. ES, the E-minis, they're pretty much one of the most liquid future markets with one-tick spreads. Okay, so with the ESs, you don't have to worry about slippage. The only time you'll really see any slippage is either during news events where it's more than a tick, is either a news event or high times or times with high implied volatility. Okay, when the market's making very big moves, maybe 30, 40 points in a day, you might see a little slippage. This one is probably one of my favorite. There's no day trading rule for trading the S&P E-minis. Okay, or any future contract there is, crude oil, the NASDAQ, the Russell, anything like that, right? Corn, wheat. You can buy and sell all you want. There's no day trading rules. If you go to the stock side, stock and options, because they're governed by the SEC, you need to be able to day trade and buy and sell as much as you want stocks. You must have over $25,000 in your account. Okay, if you don't, then you can only buy and sell stock 3 times within a 5 rolling day period. And then you have the margin requirements for the S&P E-mini futures. Okay, that's kind of like when you buy a stock. If Apple's trading at $100, okay, and I want to buy 100 shares of Apple, well, that's $10,000 I need to put up. Well, my brokerage firm will give me 2 to 1 intraday, overnight, or 4 to 1 intraday. So if I trade it overnight, if I buy 100 shares of Apple and I tend to keep it overnight, I need to have at least $5,000, okay, of my capital is going to be tied up. That's 2 to 1 leverage. Intraday, I could trade up to we'll say 400 shares, right? Because I only need to put up $2,500 per 100 shares. That's where you get 4 to 1 margin. With the E-mini futures, it's a little different. What you have is you have initial margin, okay? So currently, I believe it's like $5,200 per contract. Okay, so if you want to trade the E-mini futures, you need to put up $5,200 to hold it overnight. Now, intraday, okay, in intradays, usually during regular stock market hours, they drop that requirement all the way down to for Thinkorswim for myself is about $1,300 per contract. Different brokerage firms will charge you different rates. There are some that might give it to you for $500, some might be $2,500 intraday. So you'll need to speak with your brokerage firm to figure out what those intraday margins are. But if I'm able to control $100,000 worth of notional value of something for only $1,300, I'll do that all day long, because I'll be able to get a lot better return on my capital that I'm using. So that's one of the great advantages about trading the S&P Emini futures. That's it for part 2. The next video will be part 3 of how to trade the S&P E-minis.